Okay, it's Kurt Frankenberg again, and by popular demand, I'm going to be showing a segment of the weekly Radioactive Webinar 1 that we do. Actually, it's bi-weekly. We will broadcast this over the internet on Tuesdays at 12 noon Eastern Standard Time, and on Fridays, every Friday at 6 p.m. Eastern Standard Time. And this is just a segment from that particular presentation that we do twice a week, and that I showed recently. I lectured at MIT, the Massachusetts Institute of Technology, with a number of experienced traders, folks with degrees in mathematics and PhDs in computer science and economics. And these ladies and gentlemen just brought down the house as far as the questions that they were asking and the insights that they were shown here. I'm going to go ahead and show you in less than 10 minutes what many of the attendees at the MIT seminar told me was the most valuable portion of what they learned. We're going to take a look here real quick at some actual mathematical proof of why this kind of system works. I'm not going to say that radioactive trading is the only way to accomplish money management, but it is those folks that manage risk, that manage the downside portion of their trades, that win over the long haul. This is a calculator that was put together after I released the Holy Grail of Trading. After I put this together, one of our members put it in a better format with this Excel spreadsheet. You can put in whatever beginning balance you like to up here in the corner, and you can factor in your commissions round trip, whether you're doing stock, options, or both. And then you have a random run of winners and losers every time. And what happens is the math is done for you here. If you like, you can get a copy of this. I call it the Grail. You can get a copy of this Excel spreadsheet that proves the value of money management. Now, what we have over here is a loss limit. Okay, that's your money management, and then also your win target. Now, if you had a loss limit of 10% and a win target of 10%, you'd have to have more winners than losers to make any money, wouldn't you? Okay, so we're looking here. There's 57 wins in this particular run, random run of winners and losers. The low value was $7,400. The high value was almost $30,000, and the ending balance was $15,905.05 after commissions. Okay, this is a way that you can simulate what the type of outcome is going to be over 100 trades, and not have to actually do them. Now, if you have a 10% loss limit and 10% win target, it makes sense that you're going to have more winners than losers. But let's take a look at some radioactive trades. Okay, for example, Priceline, I had a limit of 4.86% that I could lose, and what happened instead was we gained 11.2%. Now, if every trade that I set up was like that, and we ran it for a period of time here of 100 different tries, look, we had 51 wins. This is random here, okay? 51 wins, 49 losses, and took a $10,000 balance up to $166,382.22. Okay? Now this is random every time. I may even have more losses than wins in one of these examples. Let's look at Citrix Online. I had a 2.8% loss possible. It was possible to lose 2.8% because of my married put. And what that trade in fact gained was 8.67%. Okay? Now, oh, looky there. We had more losers than winners. And instead of taking a $10,000 balance to $15,000, like we did with 10% loss limit and a 10% win target, we took a $10,000 balance to $100,000. Okay, look at that. Research in motion. Probably the highest risk that I'll ever take is 8%. Well, the highest risk I will take is 8%. And what happened with research in motion In 6 weeks, we were able to close that trade with a 17.1% win. Now, if we were to do that 100 times in a row, beginning with a starting balance of $10,000 and going through and losing some and winning some, see this, that ends up with a pretty good balance at the end. See, the high value got up pretty high, and the low value came down quite a bit, I guess. That must have been some strings of losers and strings of winners there. But over the long haul, when you have about even money, 52 wins and 48 losses, you end up with $500,000. Do you think it might make sense to look into balancing your portfolio in such a way that you have only a certain amount that you can lose? I'm going to plug in GameStop now. GameStop, I could only have lost 5.83%, and I instead gained 11.5%. Now, before I press the button here, I'm going to let you know something very remarkable. I held GameStop for a period of almost 5 months, and during that almost 5 months, GameStop went up and it went back down, and it closed at less than the stock was selling for when I bought it. But my gains from it was 11.5%. Interesting. Can you imagine buying a stock for $10, selling it for $9.25, and then still ending up with an 11.5% gain? Well, it happens all the time when you know the income methods, and we applied 3 different income methods to GameStop. Let's see what happens. If we had more losses than wins with that kind of setup, we have 51 losses, 49 wins, and 5.8% loss limit, 11.5% win target. We'd have taken a $10,000 balance, brought it all the way up to, $92,000, okay, and end up with, after some more losses after that, ended up with an ending balance of $80,792, okay? This random risk-reward calculator is available at www.radioactivetrading.com. You can download it for free. My cost was free. One of my members just put this together, and again, it produces a random run of winners and losers, and I've used it. I used it at MIT to show the fact that you can actually lose more often than win and still make money. And if your parameters here are wrong, if it's even money, for example, you say, well, I'm going to only lose 10% and I'm going to shoot for a 10% win goal. And golly, what happens if you have more losses than wins with that kind of trip? You're going to end up in debt. Okay? Well, hopefully this will shed some light on the success or non-success of your trading so far. You may understand that you're winning right now because you're either lucky or you've been subconsciously or consciously using a loss management program properly. And if you've been losing, even though you've had some winning trades, but you're ending up behind, it's because of not managing the losses. This one lesson is the most valuable thing I think I can impart, and I give it away for free. Again, this is Kurt with Radioactive Trading. I'm going to wish you happy trading. Come to the website and get this for free. It's www.radioactivetrading.com. And I hope to see you on one of our webinars every Tuesday at noon Eastern Standard Time in the United States, and every Friday at 6 p.m. Eastern Standard Time. Thanks and happy trading.